Welcome back for another look at the charts. Today we'll be looking at EURUSD, GBP USD, copper and EURJPY, and with no time to waste we move to EURUSDs for our chart. EURUSD has been on the rise since the 5th of February and on the 10th even managed to approach our R1 1.2150 resistance level. Please note the R1 was last seen on the 29th of January, while a breach over it could switch traders' focus to the R2 1.2190 line that was last seen on the 22nd of January. Our highest level for this report is currently the R3 1.2225 hurdle, and traders may keep it in mind for an extensive upward run scenario for EURUSD. In case a selling trend emerges, our first level is at the moment the S1 1.21 support barrier that was breached to the upside on the 9th of February, making it fairly relevant to the current price activity of the currency pair. Lower, the S2 1.2060 line is also imminent, as it was the strongest support level back in January when it was tested several times but not breached. Even lower, the S3 1.2020 level stands as our final support price and could be used as a barometer for the strength of the sellers. Overall, the currency pair remains in an upward trend in our opinion, with most of the price action since January being between the R2 1.2190 line and the S2 1.2060 level. Fundamentally, the currency pair is mostly driven by the USD in our view, and traders should follow headlines on the US-China showdown, which are currently in play. Moving now to cables for our chart. On the 9th of February, the currency pair broke outside and above the sideways motion it was moving within since the 19th of January. We are referring to the sideways motion between the S1 1.3760 support level and the S3 1.3580 support line. In the latest sessions, the price activity has moved higher to test our R1 1.3865 resistance level, but was not able to breach it. Yet the significance of this move is that cable has broken to new multi-year high levels, which confirms the bulls are in charge once again. If the upward trend is to continue, we might see cable moving to test the R2 1.3920 barrier. Yet in an extensive bullish run, we could see also the pair moving towards the round number level of 1.40, the R3, our top resistance line for this report. Yet we must note, if the pair returns to lower levels and breaches the S1, then the road could be set for the S2 1.3680 support level to become a target, with the S3 1.3580 looming lower also. Some analysts believe that the recent comments by the Bank of England that British banks may need 6 months to prepare for interest rates going below zero may have pushed the sterling higher. Traders should also be aware of the upcoming UK GDP rates to be released on Friday, the 12th of February. Moving now to coppers for our chart. Please note copper has moved higher in the past 4 consecutive daily sessions and has now reached new multi-year high prices. It seems to be boosted by optimism on improved economic circumstances in the US and China, with the US Federal Reserve expecting a better year ahead. Technically, the industrial metal has moved higher and tested our R1 3.80 resistance level, but was unsuccessful in breaching it so far. Higher than that, we have also noted the R2 3.85 resistance level and the R3 3.90 as possible levels to be tested if the buying persists. On the other hand, a possible correction lower could send the metal to test the S1 3.73 level and even lower the S2 3.69 barrier. Last level to the downside, we have placed the S3 3.65 line. A drop to the S3 level could change the current bullish outlook we have for the metal to a temporary sideways one. However, the industrial metal has been in the focus for the past 5 consecutive months now, as it has been moving higher to test new levels. Moving now to EURJPYs for our chart, please note the currency pair has been moving in a sideways motion between our R1 127 resistance level and our S1 12670 support barrier since the 10th of February. The levels we have noted in a possible downturn for the currency pair are the S1 12670 and the S2 12650 barrier and the S3 126.30 hurdle. In the upside, we have set the R1 127 line, higher the R2 127.20 level, and even higher the R3 127.35 level. More specifically, the R3 127.35 is the highest level reached for the currency pair since the first days of January, and before that it was seen in the 2019, making it a very challenging target if the bulls take over. Also a very strong level is the R1 127 that was tested multiple times in the past days and not breached, which implies traders tend to be mindful of it. Overall, the currency pair has moved higher since mid-January, yet has basically returned to levels seen back in December, which could confirm a large sideways motion between our R3 127.35 resistance line and our S3 126.30 support barrier. The euro traders could be having second thoughts on the strength of the bloc's currency after the EU somewhat failed to arrange the proper vaccination program. We hope that you found this report useful, and if you liked it, don't forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.